All right, hello everybody. Let's take a quick look at the markets here. What to pay attention to. So I guess the obvious place to start is with this Microsoft because it had a well, let's just say the street liked what it heard, and this thing closed at 275, and it's trading just under 300, 298 in the pre-market here. So it's probably not surprising if there's going to be resistance around 300 because people like nice round levels. Whether you're a retail trader or a investment institutional professional, people just like to put things at nice round levels. So I would suspect that we'll get some resistance there. Now, a lot of times when something has news and it opens much higher or much lower than the prior day's close, if the news isn't as good or as bad as it appears on first glance, we start to see a reversal because the people are doing their research and probably about maybe 10:30 in the morning. That's when a lot of these institutional analysts will finally get through their analysis and they'll say, you know what, these numbers are not as good as they look. So let's start selling. So a lot of times when you get one of these big moves on the open, you get a reversal, and it usually occurs around mid morning. So that's something to watch for. Now, if it turns out the numbers are as good as they seem, its stock will probably stay flat or move ahead a little bit. But let's just keep an eye on that 300 level. And here's a good example of this principle that we talk about a lot of how a level that was resistance can turn into support. So once again, 275, nice round level, right? People sold here, price goes higher, and a lot of the people that sold regret doing so, and they tell themselves they're going to buy their shares back, but only if they can get them for the price they sold them at. So you have these remorseful sellers placing buy orders at the level that was resistance, and if there are enough of these orders, the level turns into support. So that's what happened here. So I guess to follow up with that, if Microsoft does come in a little bit, look for these recent highs to, I'm going to go with my pen here. Sorry about that. Oops, that's the laser pointer again. All right, trust me, I'm a better trader than I am PowerPoint person. All right, whatever. I'm just going to go back to my laser pointer. All right, so anyway, so look around these recent highs for support if we start to come in, because again, resistance can turn into support. Now, with all this being said, Microsoft is the sixth, or it's the second biggest company in the S&P 500 after Apple. It's about 6% of the weighting. So even though there's 500 stocks in the S&P 500, Microsoft is 6%, and I think Apple's about 7%. So those two companies are over an eighth of the index. But regardless, there's this important 408 level that's been important for SPY. It was support. Here it became resistance. Now, this is the opposite. This is buyer's remorse. People buy, and when the price goes lower, a lot of the people who bought regret doing so, and they tell themselves they want to get out, but they'll only do so if they get out at break even. So we have remorseful buyers placing sell orders at the level that was support, and if there are enough, it converts the support into resistance. So that's what happened here. So even with this big move in Microsoft, we're still not back above this 408 level. In the pre-market, we're trading around 407. So that tells me that there are other areas of the market that are pretty weak. So the fact that Microsoft is such a big component of the S&P and it's not really moving it much higher is just a sign that there's things going on elsewhere. So we'll have to see what they are, or where they are, I should say. Here's our technology spider, right? Now, this is the sector where Microsoft is, and we're really only kind of getting back yesterday's loss. Not even, we're still even a little bit below where yesterday's open was. So the Google numbers were okay. It's trading up a little bit, but actually Google is actually in the communication services sector, believe it or not. It's not in the technology sector. So it's not reflected here. Here's our financials. Now this is kind of important because we had this failure, right? Support becomes resistance or buyer's remorse. People buy, they regret doing so when the price goes lower. So they try to get out at break even. So we got remorseful buyers placing sell orders at the level that was support. Now, a lot of times when we get to resistance, we and we don't get through it, we start to get an aggressive sell-off. Now, why does that happen? Well, there's investors who want to sell, right? That's what resistance is. It's a large group of investors trying to sell at or around the same price level. And some of these investors start to get the sense that there are other sellers around. That's why the prices stop going higher. When the market's moving higher, it's because there's not enough supply to fill the demand or not enough sell orders to fill all the buy orders. So the buyers are forced to pay higher prices, and that forces an uptrend. When we get to a resistance level, all of a sudden the tide turns. There's more supply than there is demand. Now, some of these sellers or investors who want to sell start to think, gee, there are other sellers lurking around. That's why the price stopped moving higher. And they start to get worried that they're going to miss out. So they start to lower their prices because the buyer is going to go to whoever has the lowest price who's willing to sell. Someone's willing to sell at 33.50, but there's someone else who's willing to sell at 33.40. Well, the buyers are going to go to the 33.40 offer or person who's willing to sell there. So they start to undercut each other and we get this snowball effect, right? And that's kind of what's happening here now. So this is not good for the broader market, it's financials. A lot of this has to do with our banking, First Republic. Now, if you follow me, and I hope you do, I would assume you do if you're listening to me right now, or if you don't, please follow me on YouTube here. Regardless, we've been hearing from politicians and from analysts, oh, the bank's been bailed out, FRC's been bailed out, it's been backstopped, so forth and so on. But what I've been saying is this is not a stock that's acted like it's been bailed out, right? We've seen no rebound since the whole crisis first became public, and we had a huge move lower yesterday, about 50%. So the people that run this company are completely incompetent. And frankly, I'm surprised that the board of directors hasn't fired them. These problems, their problems happened because, real simply, they have a big portfolio of bonds, right, which is where they put some of their investments or most of their investments. And when interest rates go higher, the price of bonds moves lower. So that's where the problem came from. Now, everyone and their grandma and Aunt Mary knows that there's been inflation. So the question is, why didn't they hedge this portfolio? A hedge is when you would buy something that would go up if the portfolio goes down. So you would end up break even in theory. They could go into the futures market, into the options market. So to me, it's just baffling that they didn't do that. I mean, I don't even really know what to say. It's kind of jaw dropping. But anyway, it shows up in the stock price. I mean, this stock has dropped from about 94% since February. I mean, that's beyond a crash, right? A bear market is considered down 20%. They're down 94%. So it's kind of unfortunate because of the incompetence of the management. A lot of the shareholders lose a lot of money, and a lot of the people that work there are probably going to end up losing their jobs. And the management's going to walk away with a big paycheck, regardless. Just a quick look at Bitcoin here, right? Trading above, just above support. So supports this large concentration of investors who wish to buy around the same price level, 27,150. Had this big move up here. We're testing support here. If we get below support, we say the support has been broken. Now, this isn't just symbolic, right? It means that the buyers or the investors who created the support with their buy orders have left the market. So anytime you take demand out of a market, it could set the stage for the price to move lower because the sellers aren't going to be able to find enough buyers, so they're going to have to force in this case, their crypto out at a discount, and that forces a downtrend. So we have this big move up here. A lot of times when you get rapid moves up, you get rapid reversals through the same price levels. That's because it traded through these levels so quickly that there really wasn't enough time for there to be a large concentration of sellers selling around the same price who are going to be remorseful and who are going to be trying to buy their shares back, or in this case, their crypto. So sometimes when you get a big move through price levels, when we reverse trend and get back to those same price levels, we get a quick move back through them the other way. So you could even see that here. Rapid move higher, rapid move lower. So just something to keep an eye on there. Treasury yields. starting to move higher again. So this would not be good for the market. The market does not like higher interest rates. And there's pretty much three reasons. One is that people take money out of the stock market and go into fixed income products. I mean, you can go into a CD right now at a bank around where I live, at least, and get about 4.5%. The second is that funds that use leverage use less leverage when the interest rates are higher because all leverage really is borrowed money. So you're borrowing money from a bank or your broker, and when the cost of borrowing goes higher, well, you just do it less, right? Or you borrow less. The third reason, probably, well, I don't know if it's the most important, but companies don't take money out of the cash register to pay their day to day expenses. They borrow money from banks in these short term lending agreements. And if the price of that goes higher, well, then it takes money right out of the bottom line. So the companies become less profitable. Tesla continues to move lower here. And this is an example of a gap, right? It's kind of the same principle as the fast move up, fast move down thing. But when we gap up through these price levels, there's no trading there. Now, what's one of the main reasons why we get support? Well, we have remorseful sellers trying to buy their shares back. If we gap through those levels and we never trade there, well, guess what? No one sold there because it didn't trade there. So there's going to be a lack of buy orders in this price range. So this is why we say gaps refill. It's an old Wall Street saying, but it's true. Gaps refill. So gapped up. Now the gap might be refilling. Next stop, probably down around 144.50. All right. So remember, no remorseful sellers are going to be trying to buy their shares back because it didn't trade there. So if it didn't trade there, no one could have sold there. And then this is just a reversal. This is the bond. This is the opposite of the yield. So we could kind of see that there's been this support around the 340 level. Remember, this is inverse to the yield. So big move if this support starts to get taken out. If this support starts to get taken out, well, that means if the bond prices go lower, the yields will go higher. Now remember, this is inverse, so this is might be a little confusing. You could kind of picture this inversely. All right, everybody, thank you so much. I hope you have a good day, and I will talk to you soon.